Growth investing is often used as a buzzword in the financial world, but a lot of people don't actually know just how important it is. Take this fact for example. Do you know the one thing that is common behind the incredible value of the world's biggest companies in history? I'm talking about tech companies like Amazon and Google, car manufacturers like Tesla and General Motors of the past, and all sorts of other companies like Berkshire Hathaway, etc. You see, while their business models and approaches were vastly different, the thing that made these companies so valuable was the fact that they were prime examples of growth stocks. And where that fact made the companies rich, they have made the people who were smart enough to invest in them even richer, which is why today I'm going to tell you exactly how you too can discover the next big growth stock. And if you stick around till the end, I'll also give you a list of some of India's biggest contenders for the next major growth stock. So let's not waste any more time and jump right in with Chapter 1, the different approaches to investing. Now, if you've ever tried to research investing, I'm sure you've come across the two big kinds, growth and value investing. And it seems that for the most part, almost all the big investors out there seem to lean towards value-based investing. However, the thing is, as effective as it is, for most middle-class people like you and me, value investing is just not profitable enough in the short term. In fact, unless you have a ton of free cash or are willing to wait for at least a decade or two, no matter how much you invest, you will not see profits big enough to consider value investing. Which is why हम जैसे middle class वालों के लिए अक्सर growth investing को prefer किया जाता है. First off, it doesn't require a ton of capital to turn a profit. But more importantly, as long as you find the right stock, you will see immense returns in as little as 4 to 6 years. This is because in growth stocks, you're looking for companies that are right at the edge of a big breakthrough. Imagine investing in Apple right before they released the first Mac, or investing in Tesla right before the Model S hit the market. The jumps these companies had in their values between then and just a few months later were big enough that the right investor could have made enough profits to last a lifetime. And while it's unlikely that you'll find something that good, the same principle can apply to a ton of other businesses. And that is what we're exploring today. So it's finally time to talk about how exactly one picks stocks as a growth investor. But before we move on to that, if you've watched the video until now and are interested in watching more videos like this, please consider liking the video and subscribing to us so we can continue to provide quality financial content to viewers like you. With that, let's move on to Chapter 2, Identifying the Stocks. Now, while almost all growth stocks share some features, not all of them are necessary in order to identify the right stocks. In fact, today we are only going to be focusing on 6 major things that make a stock a good candidate. The first of which is a changing market. By far, the biggest factor that makes companies grow immensely and fall just as hard is a shift in the market. Just look at what the dot-com bubble did for companies like Amazon, or what the iPhone did to legacy phone makers like Nokia. And these are just obvious examples. Small things like legislation, the development of a new solution to a long-standing problem, or simple market fluctuations can cause some segments to expand, and identifying these segments is the first step towards identifying a growth stock. Once you have identified the segment that is set to grow in the coming years with a ton of research and reading, finding good stocks within that segment is only a matter of time. So let's look at how one does that. Number 2, its position within the industry. The so-called father of growth investing, Thomas R. Price, often divides growth stocks into 2 categories: first-rate stocks and second-rate stocks, and both of these are defined based on a stock's market position. First-rate growth stocks are ones that are the leaders in their segment, and as a result, they will have the best potential for growth. And for the most part, being the best in their market segments is necessary for a good growth stock. Stocks like Amazon and Tesla come to mind. But that's not the only option. There are also stocks that are unseasoned and are usually from relatively new fields, so new in fact that they don't really have a market standing yet. A ton of new battery manufacturers, for example, would fall into this category. Speaking of battery tech, another very good indicator of a growth stock would be, number 3, their patents, management, and personnel. It is well known that a company is only as good as the people that run it, and as a result, when selecting a growth stock, the most important thing to consider is the people employed at the company. Is it owned by the lazy son of a billionaire or by an experienced manager of the field? If they're a tech company, do they have the right engineers for the job? And along the same lines, if a company has good researchers and managers, they'll also have good patents that make them stand out. So look out for things like that. Management is so important, in fact, that even well-established stocks can sometimes fluctuate drastically with the hiring of a CEO or even a core developer. Another obvious but often overlooked feature of a growth stock is, number 4, its life cycle stage. Like most living things, stocks too have a life cycle in which there is an incubation phase in which the company establishes itself, followed by a slow growth phase in which the company slowly starts to make a profit, which is then followed by a period of massive growth where the company uses its own profits to maximize expansion. And as you can imagine, our focus will be to look for a company just behind this stage. For this, you'll have to look for a number of factors to make sure that the company is well ahead of its incubation phase but still not fully in its growth phase. A very good indicator of that is the relation between the company's net earnings for its shareholders, like dividends, etc., when compared to its sales. If the company has high sales but still only mediocre returns, that means the company is putting its revenue into building its brand, signaling growth. Also note that where it's important to invest at the start of the growth phase, it's also important to tell when the growth phase has started to end. In financial terms, that is called maturing, and it's when a company finally starts to pay back investors and shareholders while the stock worth slows down. Moving on, one of the more famous indicators of whether a stock has potential for growth, if it has any, is number 5, untapped geographical potential. Warren Buffett, one of the biggest investors in the Coca-Cola company, famously invested there in the 80s because he saw that the company had not yet expanded internationally and felt that if pushed to, the company could multiply its value. The same applies to a ton of other companies limited by international barriers. And it's pretty simple. Agar ek company India mein achhi chal rahi hai, so it stands to reason that the moment it's allowed to expand to other nations, its value will increase drastically. And finally, on the technical side of things, we have what people refer to as number 6, Price's qualifications. Now, in his book on growth stocks, Thomas Price listed a ton of factors for when choosing growth stocks. And while we don't have time to go through all of them, the most important ones are his 4 qualifications of first-rate stocks. First, the average of the company's last 5 years of earnings should be at least 50% higher than their earnings 5 to 10 years ago. Secondly, their earnings in the current year should be at least 75% higher than the average of those 5 to 10 years ago. Apply the same rules to the dividends, and you have 4 guaranteed rules that if a company satisfies, you can safely assume is a good growth stock. And now that we're done with the qualification factors, let's look at how they apply to the Indian market of today. Chapter 3: The Best Growth Stocks in India. Now, one of the biggest driving factors behind the Indian economy is India's rapidly increasing urban and digital population. And in that vein, companies that provide cheap IT services to this population are prime candidates as good growth stocks. And after having taken a look at some big players, you'll see that companies like Wipro, Infosys, and Larsen & Toubro definitely satisfy all other categories. And it's not just tech that'll be a big demand for the growing population. Finance companies like Axis Bank, AU Small Finance, and Bajaj are all going to grow due to their changing market positions. Another big part of a growing population is an increase in food demand, so companies like Adani Green are also great options. And this is just the tip of the iceberg. With more research, I'm sure that you can find your own candidates for growth stocks. And with that, let's move on to Chapter 4, the bottom line. It's no secret that in India's rapidly diversifying market, new companies are bound to emerge. And among those companies, some are going to eventually become massive players. So it stands to reason कि जिसने आज सही स्टॉक में इन्वेस्ट कर दिया, कल को उसने करोड़पति बनना है. But at the same time, investing in the wrong stock could cost you a ton of time and a decent amount of money. But that's what makes growth investing so attractive. Because while there's definitely risk involved, the potential reward is far greater than any risk that comes from investing in a small company. So if you're someone who thinks they can do something like this, I certainly hope you give it a try. And that covers our guide on how you can pick excellent growth stocks to invest in using the most advanced approach there is. And with that, we must pass off the question to you. What do you guys think? Would you like to try growth investing? Or are you someone who just wants to invest in a mutual fund? Please let us know down below. And while you're doing that, if you're also interested in the other major approach to investing, please check out our video on value investing and why it's so popular among big investors here. And well, on that note, we must end today's video. I hope you enjoyed watching it. And if you did, be sure to leave a like and subscribe for more. With that, take care and I'll see you guys next time.